Barbiemania is everywhere except in sales of Mattel, which of course owns the iconic doll. Sales at Mattel fell 12%. Now, while that was better than feared, the company is saying that at some point the back half of the year, they do expect a little bit of pickup in Barbie sales. One of the big strengths was actually in Hot Wheels, which apparently is set for its own big screen debut. Let's bring in Arpiné Kocharyan for more. She's an analyst at UBS that covers the stock. Arpiné, thank you so much for being with us. I guess, was it unrealistic to expect some momentum in the doll sales in this quarter?
That would have been too soon, Amber, right? So if you look at the overall Mattel's results yesterday, they were better than expected, both in terms of top line and EPS, but it came with full year outlook that was reiterated despite Q2 beat. So that has investors asking whether back half outlook has changed. And I think them reiterating outlook is a combination of a few things. Number one, you still have 2/3 of sales ahead of you as a company. And second, industry retail wasn't great in Q2, and they sort of alluded to it. They alluded to some softness there and perhaps customers deferring some purchases for later in the year. And third, their guidance already implies double-digit increase in sales in the back half, and they are guiding for Barbie to grow on full year basis. So overall, I would say it was more of a cautious rather than conservative outlook.
I guess, is it surprising, given the blitzkrieg that we've seen in marketing for this one particular toy, that they don't have a lot more confidence about what it could mean in terms of actual material sales?
So they actually alluded to June retail sales having turned positive for the total company and for Barbie, including sold out product nationwide, right? And you're right, there's clearly sort of significant media and cultural buzz around the film. And of course, we should expect that to subside over time. But the key question is what this means for the brand, right? It has been about monetization of IP in a way that goes beyond just creating a film, but more about enhancing the brand experience for the consumer, whether it's theatrical, experiential, or building successful games and digitization. You know, opportunities are many once you have evergreen successful brands. And the other key part is doing it in asset-light manner without much risk to the balance sheet. You know, near term, I think the opportunity for Mattel is in consumer product business, which can be very high margin business for them over time because you have third parties making product and paying the owner of the IP a royalty fee, that is Mattel. And I think as of latest count, Mattel has something like 165 consumer product licensing deals related to Barbie alone. So this should be meaningful for the brand over time, but certainly that doesn't show up until Q4, Q1.
Yeah, do we have a sense in this quarter, did they give us any guidance as to what that kind of IP licensing fees could mean for the top line, let's call it?
They have been pretty silent about it, but we think it might not move the needle on revenue basis if you kind of look at it mathematically. But I think because of the very high margin nature of that revenue stream, that could be very meaningful for profitability. In fact, we have calculated something like 28 cents of upside just from Barbie alone. And of course, they have 14 of these deals lined up. And of course, not every brand is Barbie, but the point is that this was kind of a template test for them to show that they can create something that can create big buzz at the box office.
I guess, but is it risky because the market they're going after are people that probably don't play with Barbies anymore, right? They're coming after people our age, and we're not going out and buying it for ourselves. Is it thinking that as a mother, maybe I'll feel more comfortable now buying Barbie at a time where, you know, even a couple of years ago, it felt like a taboo thing to buy a child?
No, absolutely. And you're right. You're not going to be taking a 5-6-year-old to watch this movie, but certainly the media buzz around it and the opportunity with the consumer product business can actually be very, very significant over time. You know, and taking a step back, right, Mattel is currently trading at roughly 14, 15 times next year's earnings, and that has moved up from something like 12, 13 earlier this year. That's more than 15% discount to historical average. And this has been driven by significant investor concern about the health of the consumer in general, heading into the back half of the year. Similarly, to your point, the concern for Barbie has been whether the brand can grow from here after strong performance over the past couple of years. We have been positive on Mattel just based on the strength of the own brand portfolio and opportunity for monetization of that IP, as well as valuation.
It's not just Mattel kind of in isolation. You know, you also have Hasbro that trades on these industry dynamics. How are you thinking about the toy sector in general? Is there still that hangover from the pandemic of, you know, all that interest in toys kind of waned and they're sitting on this massive pile of inventory?
Absolutely. So inventory seems like is behind these two companies from what we could understand yesterday. But for the toy sector specifically, you're absolutely right. There has been this overarching concern that the industry benefited from COVID, and there's going to be some normalization back to 2019 levels, which would imply significant retail sales declines. Our view is that a significant chunk of that increase for the industry in retail sales versus 19 has been driven by pricing. And while there could be some pressure on unit growth and some downside pressure on average selling price as the consumer sort of tries to trade down a bit to lower priced toys, overall volumes might not be as bad. So we expect the industry overall to decline slightly in the 3 to 5% range for the year, with Mattel strongly positioned and taking share.